Hello friends, today is my fourth presentation on the subject of mergers and acquisitions, and overall this is my 35th presentation considering all the YouTube presentation I have made so far. I plan to include in this presentation the subject matter of what is the purpose for going for merger and acquisition, conducting due diligence for evaluating the target company, performing the risk assessment before the merger and acquisition, valuation of the target company and submitting the bid, negotiations aspects between the acquiring company and the target company, obtaining statutory approvals for the merger and acquisition, managing post-merger integration and activities that can affect the business adversely, and of course the future references. Need for merger and acquisition. There can be different reasons for each company to go for M&A. One is pursuing industry consolidation to increase the market share and reduce the competition. Diversifying market portfolios, thus reducing reliance on the existing products and markets and customer segments and spreading the risks. Enabling quicker market penetration. Talent acquisitions, both technical and management, and with that enables the merged company to enhance its overall capabilities as a combined entity. Acquiring company to increase the company's financial performance and enhance shareholders value. Faster and increase access to the capital and other resources like sales and distribution network, vendor base and other business associates. Access to the new technology and intellectual property. Conducting due diligence. Now there can be six type of due diligence which need to be done. One is the sale due diligence on the sales and marketing. Number two, technology. Number three, financial. Fourth, management. Fifth, human resources, and last one but not the least, legal one. Now, number one is the conducting due diligence on the sales and marketing area. Now, there are many areas which need to be studied under the due diligence perspective, but the top five aspects are being shared here. One is that assessing the due diligence on the demand potential for the products for the target company, market share both local and global for different products, channel partners strength, relationships with the high valued customers and channel partners, after sales service infrastructure. On the technology front, the DD aspects are, for top five aspects are know-how, assessing know-how capabilities and intellectual properties, manufacturing infrastructure and capacities and process capabilities, including assessment through physical visits to the factories or the plants. Supply chain strengths, supply chain management strengths, the quality infrastructure in the plants, factories and vendors, and IT infrastructure oblique ERP. Connecting DD financial aspects. The top five aspects are past 5 years and next 5 years projections for the sales, market share, cash flows, and profitability. Assessing fixed cost, long-term liabilities, audit reports, study of the audit reports like statutory audit, internal audit, cost audit, tax audit, etc., and physical inventories and receivable status. Conducting DD management on the management areas. This involves risk assessment on the various aspects like financial, marketing, operations, and legal. Leadership team profile of the target company, qualification of the senior management, industry standing and reputation, and corporate governance matters. Human resource aspects. This includes key positions, manning and organization hierarchy and levels in the target company, versatility and competency assessment, retirement age, pension at different levels. This is going to be very important aspects. Payroll, emoluments, industrial licensing and long-term agreements with the unions. Conducting DD on the legal perspective. This is one of the most critical aspects in the DD. One is understanding the statutory non-compliances which have occurred, legal cases in the Indian courts including the consumer cases, litigation status and the demands, statutory demands, international level legal cases particularly with respect to the product liabilities or quality or the warranty, etc. Performing risk assessment. Now risk assessment, there can be many perspectives, but what I am sharing is the top five are the market risk, the financial risk, the operational risk, the legal risk and the human resource related risks. Valuation of the target company and submitting the bid. Now there are different aspects for performing the valuation of the target company, and it is always prudent to take the advice of the specialist firms to do such valuation. Now different methods are like comparable company analysis, comparable transaction analysis, discounted cash flow determination based on the projected sales revenue and profitability, assets based valuation, industry specific valuation. Now other qualitative factors while valuing the target company are: what is the market share likely to be, brand value, intellectual property, management expertise, revenue growth, strategic synergy advantages that will accrue to the acquiring company. Negotiation between the acquiring company and the target company. Now, a team of competent persons from the acquiring company need to evaluate the following for the determining the financial proposal. Options could be stock purchase options, assets purchase options, both or any other alternative, and further below aspects need to be factored in the developing a purchase bid. Purchase price and the taxes, beside the negotiated price, payment terms, down payment and progressive payment based on the milestones and the exclusions, and the key manpower to be acquired from the target company, labor contracts and union agreements related clauses and validity, covenants. This is the most important, what conditions are being put forth by the target company, employee emoluments, transfers, retirement age and pension matters, again a very difficult subject, regulatory approvals and timeliness and responsibilities to be taken once there is a consent to go for merger, integration plans between the acquiring company and the target company, and change management. This is also very important aspect. Communication links between links and contact persons for resolving conflicts issues like till the complete merger and acquisition occurs, and timeliness for completion of the M&A. Obtaining statutory approvals. Now this depends on the size of the company and the nature of the company, whether it's private limited, public limited, or an individual proprietary company, and so it will depend on that whether listed or not listed. So approval of the SEBI for the listed companies in the matters related to the substantial acquisition of the shares, RBI approvals in case M&A involves foreign investment or a cross-border foreign exchange, sector-specific approvals from bodies like NCLT, TRAI, IRDA for insurance, etc. as applicable, tax authorities vis-a-vis capital gain tax, transfer prices, indirect taxes, competition commission approval to prevent anti competition activities under the Competition Act 2002, and court approvals as necessary related to the convening of the meeting of shareholders and creditors, etc., particularly in the case of listed companies. Managing post-merger integration. Executing M&A agreements movement, the principal prices are negotiated and it is agreed to go ahead for the M&A, signing of the M&A agreement, getting statutory approval speedily, communicating key highlights of the M&A to all stakeholders, which could be vendors, channel partners, key OE customers, business associates, employees, etc., at the appropriate time, meeting identified stakeholders as mentioned above and sharing these perspective highlights, integrating staff deployment with the new organization structure, reviewing the composition structure of the acquired company, retaining talented employees of the acquired company, assigning new roles in the merged entity, improving methods in all functions related to the productivity, quality, cost reduction, and market share increase, meeting the key vendors along with the key professionals from the acquired company, meeting key channel partners and key customers along with the key professionals from the acquired company. Activities that can adversely affect the business vis-a-vis this M&A. Due diligence checklists are not comprehensive and not exhaustive, and DD is performed by the individuals rather than cross-functional team. The risk assessment process is not comprehensive and not performed by the specialist. Incomplete or inaccurate information gathering by the DD team on the company's past performance and future projections for the 5 years and the other areas on which DD is done. Incorrect assumption on the qualitative management aspects, long-term liabilities, technical strength, sales growth potential, market share, projections, synergy, advantages, etc. Inadequate market intelligence on the competition's bids and their strategies. Key members of the acquiring company and target company colluding with ulterior objectives. Compromising on the meeting the statutory requirements leading to delays. Not preparing the organization for the change management and pursuing a biased approach while dealing with the erstwhile employees of the target company. Now, future references. My book on the finance and accounts function is under conceptualization stage and would be launched in next few months. You can also refer to my blogs on my website, for which the reference is given here, which will carry more details. Here I have just given the topics, the highlights. That will website will carry more details. You can also refer to some of the articles of interest on the following in my Facebook and LinkedIn. Thank you very much.